Hi everyone, I hope you're having a great time so far. With great pleasure, I want to welcome you to the next session, Beyond the Basics, Regulation and Operations in Australia and Offshore. Please welcome our moderator, Eugenio Accongiagioco, Managing Director at APAC Management Consultancy, who will introduce his panel.
Thank you for joining us today. My name is Eugenio Accongiagioco. I run APAC Management Consultancy. I do license applications and acquisitions for for the CFD and crypto industry. Today we have speakers from different backgrounds to discuss regulatory changes in the industry from different angles. I invite the speakers to introduce themselves.
My name is Courtney Fitzsimmons. I'm Head of Regulatory and Strategy for Multibank Group. I've been with the company for about 8 years now.
I'm basically the GM and Head of Australia. I also have a dual hat around product for trading and all consumer growth. So nice to meet you all.
Hi, I'm Quinn Perrott from Traction Fintech. We do regulatory reporting, mainly for CFD and FX providers in Australia and Europe.
Hi, my name is Tony Rose. I'm a director at LMP Audit Insurance, which is a specialist audit firm, and we have a bit of a specialisation in OTCs in Australia and around the world.
Hi, my name's Paul. Good to see a lot of familiar faces. I'm a lawyer, and we act for a lot of the CFDs and the digital sectors. So we're a financial services regulatory firm.
Okay, thank you. So I invite everyone to keep the mic close to the mouth because it's very noisy. Paul, can you help us to, let's start, if you can give us a quick recap about the recent or upcoming regulatory changes in Australia?
Sure, I'll start the convo, and then maybe if we talk about derivative trade reporting, I'll pass to Quinn. But I think some of the big changes that are coming up for people in Australia, some of them are known and some of them are unknown, as in people won't have heard of them. So we've got regulation of digital assets. So digital asset facilities is a phrase that is being coined by Treasury. So crypto will be regulated. It might come next year. Exposure draft might come at the end of this year. So Vakul is all over that. That's your world. Been lots of policy work on that one, and that will be a game changer for anyone actually controlling crypto assets. The next one will be the regulation of stable coins and payments. There's going to be a whole lot of changes around what's required now. That will probably come through maybe before the digital asset facility reforms. So that's another big one. And one that people probably haven't heard of is the introduction of scam codes. Now, it was just announced by the Minister of Financial Services on the 31st of July this year, but we're probably going to copy the UK regime of a code for banks, telcos, and digital platforms to be responsible for scams. It's a really big deal for these sectors. And the Minister said he would like it to eventually also apply to digital currency, the crypto sector as well, some of those platforms, so DCEs, for example. And so that will be quite a big deal, there's not a lot of detail about it yet, but they're just some of the reforms that are coming, and also there's some, I guess, some derivative trade transaction reporting changes.
Yeah, so on that one, in October this year is what they're calling the ASIC rewrite, which is a change to the OTC derivative reporting regulation in Australia. It's quite a major change. It's following a global format or a global harmonization. A couple of the major points is the format's moving from CSV to XML. So it's becoming quite a lot more complicated to create the files that get submitted to a trade repository. Also, they're containing quite a lot more new information. So firstly, there's the introduction of a unique transaction identifier that needs to match the other party of the trade. That'll be quite a challenge. And the next one is the introduction of two-way collateral and margining information. So CFD brokers will now have to start reporting on the margin requirements and the deposits and collateral from their retail clients. So coming very close now, and yeah, big change.
Thank you. I wanted to know your perspective on this upcoming regulatory changes. How do you think they are going to impact your operations, and how do you plan to adopt measures to address them?
I think we've all gotten very used to dynamicism in our sector. I don't think that this particular change represents anything more daunting than what we've dealt with in the past. I do think that there's some phenomenal providers like Traction that make these kind of reforms a lot easier for us in industry to be able to work with. But I think the upshot of it all is, over the last couple of years, we've almost been dealt a 1-2 punch every couple of months, or at least annually. So I think we're relatively used to it now.
Yeah, and I think in the crypto sector, a lot of the regulation is still getting drafted, right? So there's been a lot of consultation with the treasury papers. We have basically submitted quite a bit of advice back to that. Even from Austrac, there's been quite a bit coming in. So for us right now, it's business as usual. When the regulation comes, as Courtney basically mentioned, we're all used to that, right? Complying with regulation is not a challenge. It's just knowing what to comply with and getting that clarity. And once we get clarity, we basically review it, and we pretty much start, enabling those kind of changes that are required for the business to operate.
I will come back to you on that because I think it's a bit more complicated. Tony, I wanted to ask you, from your perspective on this, but also in regard to the DDO, what's happening with maybe?
Yeah, the design distribution obligations, which came in a couple of years ago, ASIC has really been focusing on that, not just for brokers, but really for the whole industry. I think in the last year, they've had a go. That's probably not the right word, but they've investigated and made comments on about 70 licenses, and of all different types, and at least 2 CFD providers have had their licenses either temporarily cancelled or revoked, and basically, it's a new area. ASIC has got a really heavy focus on who are you meant to target, and I think there needs to be a bit of understanding on both sides to get a bit of maturity on the regulatory side.
Just wanted to add to that. I saw that on the DDO side, the design and distribution, ASIC came down on Kraken, I think this week, and noted that they were offering margin products without client suitability. So yeah, they just came out in the news this week. So they're definitely on the case.
And also slightly different. They've been talking about discounts on margin lending as well in the last few weeks, and I know that that's a big issue, and somebody's going to jump at some point to work out who's going to go first and have a conversation with ASIC. I think that's an area that everybody has to think about.
Thank you. So I wanted to ask you about, because you have the advantage, so I was telling you earlier before, I respect crypto.com very much because it is regulated in many jurisdictions. So you also have the advantage of being able to compare, the different jurisdictions, how they are approaching the regulation on the crypto industry. So I don't want you to draw a good and bad about the jurisdiction. That is never the right way to approach it. But I think maybe Australia has some lessons to learn from other jurisdictions in terms of balancing innovation, regulation, and customer protection. So based on what you saw on other jurisdictions, what is a lesson that ASIC could learn about from other jurisdictions?
Yeah, I'll say basically,
let's not be politically correct.
We're a global organization, right? We're in 130 countries. We pretty much have got local licenses. We're one of the most locally licensed organization in the world. We've got UK, we've got France, US, we've got Singapore, we've got Dubai, right? I'll say globally, basically, Dubai and MAS have taken a very balanced view from a crypto regulation, and you can see a lot of the crypto organizations basically going to those 2 locations, right? And it's balanced in terms of enabling innovation and also ensuring that there are consumer protections, right? All of us are there to ensure there is consumer protection, and that is good for the consumers and good for the industry. In Australia, the main thing is like we've taken quite a while to get to the stage as to what the regulation should be. Now, there's been a huge consultation paper, as I said, with Treasury. ASIC is trying to bring some new guidelines out in October. It's a bit of a wait and see, being honest with you, Eugenio. Like, we don't know what we don't know until it really comes out. But the main thing, like Treasury's done really well, is a huge consultation with the industry and the stakeholders. And I think consultation is good to have, because without that, then you don't know what really getting, and there's an opportunity to ensure there's a balance.
Do you think this consultation is comprehensive in the sense does it cover only mostly the crypto exchange business, or all the ecosystem around the digital assets?
It was pretty comprehensive that the consultation pretty much happened, right? Where they went to a lot of providers to give advice on. We definitely gave quite a bit of advice on what we thought was the balance that was required. And a lot of the thing was like, do we need to have dedicated license regimes for crypto versus like existing license regimes like AFSL that are already enabled? Do we create a new mechanism within that, right? And we basically gave a lot of advice on how we feel like existing licensing regimes are already available that should be expanded to enable crypto. We don't need a dedicated group for that.
Thank you.
So, yes.
Paul, do you want to add anything at all?
So Australia is behind the 8 ball compared to other countries. And, Vakul, you know this, Crypto.com is, like you said, got more licenses than almost anyone in any industry. We think the exposure draft legislation should be coming soon so that we can catch up in Australia. You've kind of got you've always had this in the CFD sector, different layers of regulation in different countries, so you could map the world with green light jurisdictions. They all have equivalency regimes. Orange light jurisdictions, they're okay, and then red light jurisdictions where people basically can do whatever they want. And so there's less and less red light countries, I think. Some of you know our firm was in the drafting team, and we recently released model law for the Commonwealth Secretariat. So 19 countries have started to implement that to create a baseline, like licensing, registration for crypto, virtual assets. And so that's happening for Commonwealth countries if they want it. Australia's got their own framework in place. But so there is a change and an increase in regulation all around the world. And we're all here in Australia waiting for it to come. But I guess moving on to the next question is, well, what do we do now? ASIC has come out very strong and will, in the next couple of weeks, update its guidance for the crypto sector that it thinks there's a whole lot that the industry needs to be doing now to comply with the current law. So that's going on as well. And an example of the current law is the design and distribution regime we just talked about. So if crypto providers don't realise if they have a lending product, credit products are captured by the design and distribution regime. And so our firm's helped a lot of businesses lift their stop orders, and it's something that's happening now. So you've got now, and then you've got what's coming, and they both create issues.
There was one this morning, I think I read, now I remember which company, there was a DDO this morning issued for...
Is this the one, Vakul, that Quinn, that you mentioned? Yeah, so that was relating to a credit product. Yeah.
Just in relation to that as well, when ASIC does come out and talk about these things, sometimes they don't think about, people have been living in this environment forever, and the businesses are developing and creating, and then ASIC says, as of today, you should have been complying with this, this, and this, but they take it backwards. And I think that is something that is challenging. I mean, you don't normally get retrospective introduction of, call it law for want of a better word.
Yeah, I think if I can comment on the industry consultation, it's all going to matter if ASIC actually takes it into account. It's great that we have these conversations, but if we learn anything from product intervention, it came out exactly as they wanted it to. We all put a lot of work into giving them information about our position. At the end of the day, we knew that there would be an axe taken to FX, but I do think that it's going to remain to be seen with crypto whether they're actually really willing to adopt this and adopt the uniqueness of it, and how incredibly interesting the future will be if we really decide to support these businesses. But I think the kind of industry piece and how much that makes a difference in the framework that's actually rolled out is going to be an interesting space to watch.
Yeah, and listen, like on that one, like we basically recommend regulation has to be fit for purpose, right? And again, I agree with you. You can do consultation, but you can easily ignore it too, right? There's one is like saying that, okay, we tick the box versus, going back and listening, okay, we understand the goods and bads. And I feel like for us, it was also like, regulation has to be fit for purpose, and you can't put like a square peg in a round hole, right? Like there has to be things which crypto industry is doing really well and things which it can do better, and seeing that what are the safeguards that we want to put from a consumer protection, where a lot of the regulation really came hard after the FTX collapse basically that happened. So again, agree, it's a wait and see. We're looking forward to seeing what basically comes out.
Yeah.
Thank you. So one hot topic was that there were some class action filed against some large names in our industry. There were against like IG, CMC, IZ Markets. The outcome could be win, lose, or settle. And I would like to have your opinion on how each of these potential outcome could affect the industry in terms of measures that the broker will take or not take depending on the outcome of this class action. Maybe I will start with you, Quinn.
Yeah, look, I think this is quite an existential threat to the CFD industry. Firstly, the class actions, a lot of them are actually funded by companies that are specifically set up to give a lump sum of money to law firms to go after rich industries. So they've had a look at these brokers and seen that they make a truckload of money and essentially said, let's shake them down. So in the whole process, we've actually seen some quite shameful stuff where like leaked emails made their way into the ABC of what staff had said about someone else's sexuality, which has got nothing to do with the appropriateness of the product that they're trading. So win, lose, or settle. So if these cases win, I think it will be the end of the CFD industry in Australia, which is quite sad. I look around here and I see old staff and people that I've known, and it's really supported a whole industry and a lot of tax that's gone to the Australian government. Settle is probably worse. It's a slow death. It'll empower these firms. They'll drain the big companies of money, and then they'll go somewhere else next. Be that the crypto industry, or be that another financial industry, or be that another jurisdiction. And if these class actions lose, I think it will be a great foundation and recognition of the CFD industry that it can't get kicked to death, and that there are some limits to the rules in the lawsuit. So yeah, shameful act. I hope they lose. I hope no one settles. That would be the worst scenario, because individually it might look like the good thing to do, settle, pay them 10 or 20 million to go away and leave you alone and leave your stock price alone, but it's just going to get worse. It's like paying a bully or paying a hacker or a terrorist. It's not going to stop them at all.
Hey, Paul?
Yeah, I don't reckon it'll kill the industry. If you look at the claims for these class actions, they're about conduct before the PIO. So the behaviour that they're making it, that the law firms are making an issue of, is with respect to conduct that's changed. So I think, I think there will be some payouts, and I think I don't know if anyone's done the analysis on the listed providers and their stock price when the class actions were announced, but it wasn't. I'm not aware of any drastic impacts. So I think there's a bit of market sentiment that it won't kill the industry. So I do know that these things go on for years, and they're drudgery for anyone involved, because they don't resolve. I mean, some of them were launched in 2022. We still don't have any updates on them, right?
Thank you. What is your...
I'm industry, so everyone knows my opinion on this. I think it is as shameful as Quinn does. I mean, to be honest, I think the difficulty with ASIC and these lawsuits is that no one's willing to give us a prescriptive legislative instrument, or like our reg guides don't say, okay, client suitability is this subset of questions, you need to fit X, Y, and Z. They make us interpret it, right? And they make us take a position where we say that we think we have reasonably identified the client's suitability. But then it becomes a very fickle game, because after that fact, that can be reverse engineered to be in breach or insufficient. But they're not willing to say 1 + 1 = 2 to us. I agree with Quinn that I think that it's going to spell maybe not the end, but certainly something similar. Because for all that we've been through over the last few years, if this happens, they've very clearly targeted the largest juggernauts in our industry, and I think that's lasered, and I think that's purposeful. I think that's going to set a precedent which is going to be very, very dangerous for all of us to come. And to be honest, for businesses that have global presence, they may well just say, oh, we're done with Australia now. Like, we've been punched in the guts way too much, and if this is any kind of standard of what's going to happen if you get really big, which is, let's face it, all of our objective, it's going to be a really scary place to operate, because Australia is expensive, it is burdensome, and the only benefit is that there's saleability of our licensing regime and the confidence that both industry and client has in it. I'm going to say that you're going to have a lot of the industry that's going to lose a lot of faith if this comes out as anything else but a loss to these class actions.
Just a comment on that. I think that, I mean, it's the big end of town that the class action firms have gone after. The big end of town has got a lot of money to fight that, and a lot of reason to want to fight that. And some of the individuals that are involved in that are very, very determined. And I don't believe, you know, from a regulatory perspective, forget the class actions. Those firms spend a lot of time and effort on regulating themselves in accordance with the rules, right? And I know there's a different level of proof in a civil case and a criminal case, or in a regulatory case, but I honestly believe that the industry, I agree with Paul, I don't think it's as bad as that. I think that the industry will come out stronger, and because the rules were different 5 years ago, it will reinvent itself. And also the product intervention order, it's up for review anyway soon. So I'm not as negative. I really hope that the big players take one for the team's not the right word, but actually go through the process properly and make sure that they absolutely fight their corner. Because I think that's what's needed. Because if these firms went after small brokers, they wouldn't have the money to fight them. And at the end of the day, in a legal case, the person with the most money wins. But that's really how it works.
But it's interesting that they went first against the large ones. In theory, they could have gone against the small ones, built a case there, and then used that against the large ones. So it's interesting that they started from the ones who can defend themselves.
I don't understand that. I mean, I think they have said they're going to go through the entire industry, but they're not going to do that if they lose, because it wouldn't make any sense.
So, and if there is a sentence against the brokers, one aspect that would be affected is also the employment in this industry in Australia. And to that end, another phenomenon that has affected it is the fact that now most brokers have multiple. We went from some brokers sometimes having some offshore jurisdictions to now being the rule that all brokers have multiple jurisdictions. And on top of that, in the past, it used to be just, let's say, empty office. It was like an empty shell. But now more and more brokers are actually building proper offices with economic substance, moving core functions there, including compliance. And this is going to all the advantage of these other countries where, I mean, good for them, they are improving their skills. But this is affecting the industry. So I wanted to hear your thoughts on this, and starting from you, Tony, because I also wanted to know from an auditing perspective, how this also affects in the operation in terms of, for example, separating Australian and non-Australian clients within,
I think, look, sorry.
You get that?
So the PIO really made a massive change to the industry. Before the PIO, I don't know how much bigger the Australian industry was than it is now, but it's a factor of 10 or 20 or something like that. I mean, the leverage change was, I think it was on average 27. So you divided whatever it was by 27 and you came up with 30. And the industry has sort of changed in size already by that. And a lot of brokers have gone offshore because they have to. But what they've been doing is using Australia as a marketing head and as a wholesale license, or using it as an LP within their group. And if you are a wholesale player, you're not affected by this class action at all. But also, you know, that the industry still exists from a wholesale and a perspective, and there's still a lot of people in this room, which means there's a lot of expertise in this country, and people are regulatory arbitrage is the wrong word. It's the wrong word, but there are lots of licenses around the world that offer different things in different places, and I think people are very sensible to take advantage of that.
So Eugenio, I think you're right. Brokers are getting licenses in lots of countries. So in Australia, we've had a 10-year squeeze for the CFD sector. 10 years ago, ASIC started putting out media releases about how it had privately negotiated with large brokers to get out of certain countries, like Japan or other countries. In 2019, ASIC came out pretty strong and said, get out of China to Australian brokers, and it had met with SAFE from China, and that was a real shrinking. The squeeze was slowly tightening. In 2021, the product intervention order came out, and that reduced leverage. And now we have the enforcement of the design and distribution regime with stop orders and all that. So as that squeeze continued, more licenses were gained in other countries like South Africa and lots of countries all throughout Europe. And so, yeah, I think, Eugenio, how you described it is what's happening. Businesses are forced to do things locally. They're forced to deal with local regulators. And this idea of, well, it's unsolicited, so it must be okay. I think that you can't assume that for any country. Just like we'll talk about this, but prop trading, just because it's demo doesn't mean it doesn't need a license. So anyway, there's been a bit of a squeeze, and I think what we have now is lots of licenses in lots of countries, less profitability by having a head office in Australia. In fact, you can't have a head office in Australia and help offshore brokers open or close positions without pulling them into the product intervention order if you're dealing with retail clients. So very hard to have head office in Australia.
But in general, do you think that ASIC thinks, okay, you know, as long as you onboard the Australian clients in Australia, then you do whatever you want offshore, I don't care because my role is to protect the Australian investor, or they start realizing that there might be a reputational risk if the same brand operates in different ways elsewhere?
We can see from ASIC's actions that it takes action against Australian brokers, mainly to do with Australian clients. When there is an issue with an Australian broker and an offshore client, it's normally a privately negotiated regulatory outcome. It's not as easy for ASIC to take action against an Australian business for what it's doing overseas. It can do it, but we haven't seen much of an example of that. But I don't know, Courtney, as a provider yourself, what's your perspective?
I mean, I think it's business continuity almost. I mean, we're commercial enterprises, so if you rolled out a regime and said to us, hey, look, you're going to take, you know, an 80% cut to your bottom line, like what were we supposed to do? At the end of the day, I think that was the sad thing about the product intervention process is it's almost counterintuitive to what ASIC was there to do, because these people that they'd used in their stats, right, all of the loss ratios, they're still trading. They're just trading offshore somewhere. And I think that it's a very difficult thing to try and manage, because there is obviously a PR element. When you deal with offshore, the afforded retail protections are near on non-existent. And I think there's some people that it matters more to them to have the protections that a tier 1 environment supports or offers. But I think you've got some people that are either taking a really punchy interpretation of sophisticated, and I think that's a ticking time bomb, or there's the rest of us. We've got 11 licenses now. We had 1 when I started. And that's purely because, number one, to protect ourselves if we've got a key market, we get locally regulated. Or number two, just knowing that we've got a place to go if someone takes an axe to the industry like ASIC did.
I'd just like to add to what Courtney said, that really the protections might actually be doing more harm than good. And you know, I see a parallel with prohibition 100 years ago in the US. Like, people wanted to drink, whether it was good for them or not, and the government banned it, and the mafia won because of it, and people kept drinking. And you know, looking at a crypto example, but they banned crypto derivatives in the UK. And a lot of UK traders went and opened accounts with FTX in the Bahamas. And you know, that's not really protection, is it?
Thank you. So changing completely topic, one current trend, someone calls them capital allocation programs, someone calls them funded trader program, or improperly called prop trading business. But this is a worldwide trend, has been around for a while. And Australia has played a big role in it from the outset, either in terms of technology or the actual providers, or as we all know, trading platform wars. Yes, Metacodes, I'm talking about you. And so I was wondering, what are your thoughts on this, about what's happening in Australia from a regulatory perspective? Do you think it is the ASIC going to look more carefully at that? And do you think it is just a temporary trend, or is something that is destined to last? To Courtney, I also wanted to ask if you think that the kind of clients who would use those platforms are the same as the ones of the Forex brokers.
I mean, I think there'd be cross-contamination for sure. As far as whether I think it's a fickle game. To be honest, if we've seen anything from ASIC, anything relatively medium to high risk is in their line of fire. I think that if you're exclusively offering prop trading, you're here for a good time, not a long time. But look, I understand though, as far as industry is concerned and providers are concerned, we need to pivot. We need to be dynamic, we need to be fluid, because if any of us have got any likelihood of being here in 10 years, there's diversification that needs to happen. Strategy is, quite frankly, in my opinion, the most important department in any organisation now. But look, I'm not sure. I envisage ASIC is going to come after these people. I'm not sure how it's been able to get the following that it has without any kind of big kills yet, but I envisage the end is nigh for a few people.
Okay, thank you. What do you think from a regulatory perspective?
So, prop trading is, as you said, it's a phrase that we think of, you know, family offices trading their own money, but it's being used for this new service, which is a bit of a game. You know, can you trade with a certain level of profit, and if you can get through these doorways, then great fortune awaits you. No one can get through those doorways. And so regulators around the world are starting to say, well, we think that's misleading, deceptive. I think last year the CFTC, in collaboration with the Canadian government regulator, took action against a broker for its prop trading promises. So you've got complicated terms and conditions, you've got misleading statements or opaque rules about when you're entitled to either trade the firm's money or get your winnings. And most people just lose their money. From what I'm told, we've had quite a few businesses come to us and say, do I need a license to do this? There is a myth circulating the globe that because it's on demo, it doesn't need a license. That is not always the case. In some countries, it might be the case. Each prop trader seems to have slightly different characteristics or terms. So you've got to look at each one on its face, consider it carefully, and we have certainly found that some of those business models do require like a full market making license, particularly once you get through all those doorways. If you do have live trading, obviously that's all captured. So yeah, the myth that it doesn't need a license should be debunked now. And it's pretty high risk, and as Courtney said, well, ASIC has come out, I think, and said they're looking at this at the moment. Yep.
Thank you. No one else on this hot topic. So in terms of technology and regulatory challenges for new technologies, AI, big data, decentralized finance, so what are the new things coming over the horizon? What do you think are the regulatory challenges for that, or how they are going to impact our industry?
I'll go first. I think firstly, like AI, our feeling is it's still very, very early stages, right? Like it's basically forming. There's a lot of debate going on. Is it going to be a global regulatory regime for AI? Do we going to have local regulatory regime? And what are some of the guardrails? I think that debate is going to go on for quite a while. I think it'll be more responsible for organizations to start creating their own guardrails. So like we basically invested in AI, we're leveraging AI in its early stages, experimenting with it. And we created a whole guardrails document around how to use AI and what things we're not going to enable with AI. And we took a very risk-adverse, we didn't want to take risky things. We kept it very, very simple. And also got lots of legal advice around the AI application, right? To say what are the guardrails there. So, this comes down to whether it's prop trading or anything.
So legal advice is like from an ethical point of view, from a data protection point of view, what kind of?
Everything, right? Like for AI implementations that we did, we sat down with security in a major way. We had deep discussions with the security team. How are we going to keep the data secure, right? We didn't want any of our data basically going out anywhere. We're very protective of the data. So we set up a whole huge infrastructure layer within Crypto.com to test AI, and that was not going anywhere in that data set, right? So those are the kind of due diligence that we had to do for months. And this wasn't like, a one-day conversation with a meeting in security for 1 hour. And, you come up with some guidelines. It was a lot of consultation that we basically implemented at that stage. So yeah, like basically AI, I feel, is still early stages. There's a lot of generative AI. There's a lot of talk around it. True AI in terms of neural networks is still to be created, right? And that'll be the interesting world when it really expands and those neural networks can self-morph themselves into brains that can, then where does the limit come in? That's where the challenge is going to be.
Quinn, yes.
Yeah, look, I'm a bit of a AI skeptic. Might be my old age and get skeptical about things, but last year ChatGPT came and really hit the headlines and everyone said this is going to change everything. And I liken that a bit to the blockchain about 5 years ago when people said the blockchain will change everything, outside of crypto, but just the blockchain in general. So obviously there is artificial intelligence. It's been around for a long time. It is getting slowly better, but I haven't seen it change everything. I've seen a lot of people use AI as spin on everything, but when you dig into it, it's really just computing something that's been around for a long time, or it's really just a Google search with the results presented in a different way. So definitely a slow progression to things being more automated, but I don't think we're all suddenly going to be replaced by AI in the next year or two, as some people predict.
Thank you.
I think it's iterative. I agree with Quinn. We had high volume trading in, I can't remember if it was the 90s or the late 80s, I really can't remember. At the end of the day, a market is lots of people facing off against each other, and if it's people facing off against each other or computers facing off against each other, they're still facing off against each other. Markets will continue.
It's like there's a fire alarm. I'll finish. We've got a countdown.
It's leaving from platform 3.
So I take a totally different view. I think AI is the biggest technological advance we will experience in our lifetimes, and I genuinely believe that. Yes, it's not doing that much now, but there's a thing called Amara's law that we over-predict the short-term benefits of technology. We under-predict, or we don't adequately predict the long-term impacts. So I think it's massive. I think crypto is massive. It's like email. It powers things. You don't even realize the technology's there. There's a lot under the water. We talk about the tip of the iceberg. That's what retail people are doing on the exchanges. I think they're both profound. Anyway, but I think with AI, Joe Longo just came out, and this is my final thought. Be careful of AI washing. The chairman of ASIC has just said, don't pretend to be using more AI than you really are, because that's misleading and deceptive. So I think that's a big deal.
Yes.
And maybe next year, by then, if I'm right, which I won't be, then we can ask, we will have passed the point of singularity, and we can ask our AI overlords the answer to that question, and they'll answer.
Yes. Would you like to say?
No, I just think there's a skills gap. I mean, when we talk about how it's going to change anything, when it's in an organisation, you've got to have people that understand it. And this is a very unique skill set. It's a very specific skill set, and it's a very new skill set, right? You've got people that are incredibly experienced, but they would know nothing about this. So I just think that it's going to be interesting. I certainly think that this is a really interesting wave, an era for us all to be involved. But whether it's going to become part of the normal course of business in the reasonably foreseeable future, I don't think so.
Thank you all. I think time is up. Time is up. Thank you to all the speakers today. Thank you to you for listening.